This is Market Day Report. We're up and trading. And where are the markets going? Well, let's start first with the corn market. It was higher in the overnight session. And look, we come out of the gates moving higher, 420 3/4. On the December, it's up 3 1/4 cents. Was it the pretty good export sales number when you combine old and new crop? 1.37 million metric tons. Or was it the announcement of a flash sale to China overnight? 135,000 metric tons to China and another 284,000 metric tons unknown destinations. Either way, we're finding buyers of U.S. corn. Soybeans. Now, soybeans over 400,000 metric tons in export sales, again combining old and new crop. 10.25 on the new crop November contract, that's up 2 1/4 cents. Wheat market. Wheat had 712,000 metric tons in sales, up 50% over the 4-week average. And Chicago opens 2 1/4 higher, 542 3/4. Hard red has been moving higher as well, up 4 1/4, 527 3/4. Cotton market, 170,000 metric ton or running bales sold according to USDA. December up 47, 68.71. Tommy Grisafi's with Nesvick Trading. Now, is it the export news that's adding maybe a little boost to markets?
Yeah, absolutely. And just whether there's this argument of are we getting too much rain, nightly temperatures, all the stuff. The export news is great. I guess I was thinking about this morning what I wanted to talk to you about, or your listeners and viewers, is that we're really just arguing we have too much corn. We're just arguing about how much too much we have. Do we have way too much or just too much? There's plenty of corn around, and it looks to be another good corn crop. Now, things can change, and sometimes they do. For the American producer, they would love a rally. But yes, China buying corn this morning was a great sign. They're kind of absent from buying beans. Usually they buy beans for that OND time slot. We up in North Dakota very much depend on getting those beans harvested and out the PNW. And I don't know if you've ever been to the PNW, Tony. I never have, but I hear it's quite amazing when all those trains start making it out there and loading up those ships. But we're using a lot of grain domestically. We'd love to export some. We keep talking about all these great trade deals, yet corn, beans, and wheat are much lower than where we were when this original tariff talk started. So I don't know if the American farmer feels like they're winning. Maybe if they go to the FSA office, they feel better. Back to you, my friend.
Yeah, I'm glad you brought the PNW in. Pacific Northwest is the region we're talking about. And actually, they're now starting to export so much of the grain that we're seeing some terminals shutting down in the Great Lake region. And I'll get to more of that a little later this morning, but I'm glad you brought in Pacific Northwest. All right, Tommy, let's take a break. We'll come back. We'll talk about a market that's been on fire. And by the way, when it's on the grill, it smells real good. It's meat. Market Day Report continues in a moment. So just looking at export sales here for our meat. And so now we're talking about beef and pork. 16,700 metric tons of U.S. beef. In that week, that's up 46% over the 4-week average. Not just a week-to-week, 4-week average. 17,000 metric tons of U.S. pork sold, up 43% over the 4-week average. So we're seeing some sales here. And by the way, China back in the market for U.S. pork. So will that spill over into the markets? Well, right now, live cattle futures are lower, down $1.35. 225.67. All contracts are starting the day in the red. May have a little more to do with fundamentals like boxed beef. Feeders, August, 328.65. That's down 287. And then over to the hog market, that August has been higher 6 straight sessions. Starts in the red, 108.22 off a quarter. Let's go back to Tommy Grisafi, Nesvick Trading. What are you watching here?
Well, this morning we were on the every morning Nesvick Trading does a cattle/grain conference call. It's very heavy cattle. Let me be perfectly clear. There's probably about 15 minutes cattle talk and 2-3 of grains. But with that, something interesting happened. And it kind of explains what happened yesterday. Is that the Bloomberg Commodity Index is going to be allowed to have a lot more contracts on. And if people don't understand, they can Google it. But it was just announced a few days ago, so it very much feels like the big boys, the power to be, the folks in the know are very much getting ahead of that, and that explains yesterday's ramp up. In that this happened several years ago, that the people who trade funds were allowed to have double the position. That's why you see, oh, they've never been this short in corn. Well, they were never allowed to be that short. They were never allowed to be that long. So with this commodity index, they're going to be allowed to be long or short. Currently, they're long a lot more cattle. But when you have a commodity index that an investor wants to buy, that was just announced, and that'll take effect early in August. Also, some news out of Australia on imports. So this cattle complex, in the amount of news we get, although it was really cool, China bought some corn, the news in the cattle is coming out 24 hours a day, whether it be screwworm, Australia, index funds, and their position limits, etc. No shortage of information. If you can make money in this market, great. If you can protect profit, great. And with that, thanks for watching the show. Back to you, my friend.
Yeah, good points there. Tommy Grisafi with Nesvick Trading. All right, there are a couple of reports coming from USDA.